Welcome everyone. Today we're going to be talking something that is very important, whether you like it or not. We are in a system that credit is very important. And sometimes there's a lot of misinformation. So I have the pleasure to bring in Edward here that's gonna explain to us the things to do and things not to do. And hopefully I will be asking you questions that might address your situation. So Edward, can you give us a brief introduction of what you do and history of what you've been doing?
Yeah, definitely. Well, first of all, thank you, Danny, for having me on. I appreciate it. You said my name's Edward Araujo, so I'm the president and founder of Texas Consumer Credit Services. We're a credit repair or credit services organization here in Texas. We were started in 2014, and we kind of established it with the goal of obviously we help everyone with their credit, but we're really focused on the real estate industry. Right, that's really one of those biggest purchases. A lot of times, your credit for a car and things, you can go and, buy here, pay here. But for a home, it's really, really important. So that's my specialty. I've been in finance and credit, close to 20 years. I'm also the author, and I wrote this book right here called Credit Decoded. That's actually on Amazon. I don't know, it's really, really cheap. And it's just a overview of credit. So, that's my background. Me and my team, that's what we specialize in. We work with realtors and lenders, helped a lot of realtors throughout Texas, and lenders help their clients. Right. So that's kind of our specialty. I know, there's different parts of the home buying process. For example, like a realtor like you, Danny, right? You've got a certain skill set and things you do. And then there's the lender. A credit is kind of thrown in there where like the lender knows a little bit about it, maybe sometimes the realtor, but it's really a specialized area, especially dealing with maybe credit challenged clients. And that's where we like to come in and just be, part of that team.
And that's very really good to know because like you said, there's a lot of unanswered questions from in my perspective, and especially the consumer, our client, because they say, well, they told me this. Well, I heard this. My friend didn't have to do that, right? And some people don't understand that everybody's a different case, you know, and certain things take longer, right? Well, hopefully the questions that we're gonna ask today will answer some of the confusion that is out there. So my question number one will be, what one credit myth that's stopping people from buying a home today?
So that's a good question. And I think the thing that I hear a lot is that they can't fix their credit, or that there's credit repair scams. Now, there are. Like in any industry, there's bad apples, and especially now with social media, and you hear something on TikTok, you see something on YouTube, and it's like listening kind of to a doctor to get medical advice from a doctor on TikTok. So a lot of them think that no, it can't be fixed, so that they never start. Now I'll kind of caveat on that, which what I'm trying to say is when it's credit, and specifically more credit, there's some myths that I hear that I've been hearing a lot, right? So one of the things I hear a lot is, let's say when you get a collection. So collection happens like, you have a loan or a credit card, you don't pay it, you go late, eventually charge it off, or you send it to a collection company. There's a lot of videos out there that have been going out through the years that, if they sell it to a collection company, you don't owe it. Right, and they can't report it, which is false, right? They buy the rights to that debt. They can definitely report it, and you still owe it. So they're telling people, send these letters saying, I didn't have a contract with you. I only had it with Capital One. So that's one of the missteps out there when that goes. So, but I think that the biggest thing is that people just don't think they can fix their credit. Okay, and you can. I don't know if you want me to briefly explain kind of what credit repair is, because I know we're gonna talk about it, and sometimes people don't even really know what that is, right? So technically what we do as a credit services organization is we'll fight on the buyers or consumers' behalf to try to get negative or derogatory accounts like collections, charge-offs, repossessions, late payments, whatever it may be, legally removed from a credit report. Now, there's no magic button or wand that we just say, here, delete it, or it's not mine. The way this works is that there are laws. There's over 200 consumer protection laws that credit bureaus or hospitals or dealerships, collection agencies are supposed to follow. But the reality is that 50 to 70% of the time they don't, or at least not exactly the way they should. And they kind of do it on purpose because they know that the average person doesn't know all those laws. So they kind of take advantage of them. They try to intimidate people. When you have a collection, they call, they threaten, they do all these things. So our job when you hire us, enroll with us, is we basically represent you almost like an attorney would, right? But for your credit. So we'll go in, we'll investigate, we'll audit all these accounts, and we'll try and find those violations and those errors, whatever it may be. And that's what we use to try to fight to get these negative accounts removed. Okay. And since these negative accounts are the biggest part of your scores, then that's where you see the biggest score increase. So most of the time when clients come to us, it's because they went with you, you took them to the lender, and the lender says, hey, you got a 520, and you got some collections because, a couple of years back, they lost their job and they couldn't pay for things. That's where we would come in. Right? So that's the main focus. That's the majority of the work that we do. The other part of that is also coaching and helping clients on how to use their credit correctly. Do they have enough credit? Really optimizing that credit report to give them the best chance of a mortgage, an approval. Because there's shortcuts out there and things that you hear, but some of them are fraud, scams, or they're going to come out in underwriting, and it doesn't matter if you have a 700 credit score. If all you got is authorized user trade lines, you still might not, right? So our goal is to try to get that client to that end goal of a mortgage qualification.
Okay. Yeah, that's a lot of good information, and especially since you're right, there's a lot of information on social media. People hear news and they hear on like TikTok, all those platforms that some of them, there's people that don't provide the correct information, right? Just for them to get them on a subscription and stuff like that. But here's my second question for you would be, what's the biggest credit mistake you see home buyers make right before applying for a mortgage?
So the main one, and I don't know if you run into this, but if you've been doing it long enough, you probably run into it, is where, right before closing or something, they're all excited and they go and buy something. Usually a lot of furniture sometimes, right? Or I've seen cars or something.
Yeah.
So that is the biggest mistake for a lot of reasons. First of all, that can lower your credit score.
Mm-hmm.
It can change your debt to income ratio with the lender, if they're barely there, so it can ruin a deal. I don't know if it's happened to you, but that is probably the biggest mistake that we see. Or racking up a credit card, and maybe say they didn't get a loan or something, but they went and put the furniture on their credit card.
Yes.
The lender runs credit one last time right before, and that score, so your credit card balance and utilization are the second biggest part of your score behind paying your payments on time and negative accounts. So I've seen scores change 50 points, 70 points just because of that. No missed payment or anything. And now, qualify. So yeah, that would be the biggest thing. And a good thing that where we like to come in and help is, let's say when a client's working with us, right? We're doing a soft pull on credit every 30 or 40 days until basically we close. So a lot of times we can try to catch some of that stuff, right? Before, maybe it's a couple months before, or at least not days, and be like, we send a progress report out and we'll send one to you, let's say for the lender or the realtor with their permission, and it'll say, hey, we noticed a new inquiry that wasn't recommended or authorized, So, but yes, that has to be probably the biggest mistake.
Yeah, that's something that we always preach. That's something that happened to me. I think it wasn't last year, it was a year ago. I mean, last year or 2 years ago. We were closing and he purchased like brand new furniture. It was crazy. And I was like, no, no, no. So what he did was he called where he bought it, the place. I don't remember where he bought it, but he returned the furniture back, and he got we were able to reverse everything, and then he was able to. The owner was actually told him he will hold them. I'll say, I'll just hold it for you, and then once you're done, you come, and that's what they end up doing. Oh, he had some. Yeah, we were able to save that. So let me see what we have here. What is if someone's credit isn't perfect, how fast can they realistically improve it enough to qualify for a home?
Okay. So we get that asked a lot also, right? And there's a couple different parts to this question because it can vary, right? Every person's situation is unique, right? So I've had clients to where all they needed was had some dispute remarks on there that some other company didn't remove, and that was holding them up, and we removed them in 24 hours. They're good to go. Or a client takes like a year. Okay. And here's where it's going to depend. So let's say you take someone to a lender and they're denied, right? Our clients are usually like in the 500s. right?
Right.
And it's not just paying down some credit cards. They've got collections, they got maybe a repossession, they've got some late payments. The thing that we recommend is always the free consultation. And in that free consultation, we're going to go over their credit reports, right? So that's where we're going to we'll never know exactly, but we'll get a better idea of the time frame. Now, as a general rule of thumb, I tell my clients to prepare for at least about 6 months, with potentially worst case scenario maybe taking a year. But that's going to vary. And the reason it's going to vary is, let's say we do the consultation and they've got 3 medical collections, a repo, and some late payments, right? The way the process works is, when we start and we contact creditors or collection agencies, they have by law 30 to 45 days to respond. So we have to wait. There's no way to expedite that, right? Now, when we get responses, that doesn't necessarily mean they're going to remove it or fix what we wanted. Most of the time at the very beginning, we get generic responses where they really don't look into it. Just get something in the mail saying, yes, it's correct, or we looked into it. And that's really where our work starts. Depending on what happens there, we have to, well, we're going to ask for proof of how they did it. We're going to ask for a method of verification and then send it off. Wait 30, 40 days. And then maybe they just send something generic, a statement. We're like, that's not what we wanted. So we have to ask for a reinvestigation. We may have to appeal. Depending on how tough it is, we may get to a point of threatening potential legal action, sending it over to some of the affiliate attorneys we work with, putting in complaints with the Attorney General, the Federal Trade Commission. So it kind of depends on, once I look at a credit report, I'll get a better idea, right? We've done it for so long, depending on who the collection company is, the amount, how old it is, we can get a better idea. But I would say it's safe to say, tell clients to prepare for about 6 months, maybe a little sooner, maybe a little more.
Yeah.
But that is definitely better than 7 years. And what I mean by 7 years is, most negative accounts collections, once they hit that status of being a collection or charge-off, will stay on there for 7 years at least, right? Even if you win the lottery and pay everything today, your score would almost not change. That's where a lot of people get confused, right? When you get a collection account, it's like getting a speeding ticket. When you get the speeding ticket and you go pay it, it doesn't mean it's not on your driving record anymore. It just means you don't owe it. You're not going to get a warrant, right? They're not going to come after you. Same thing with the collection. When you pay a collection after it's a collection, it doesn't mean it's taken off your credit report. It doesn't mean it didn't happen. It just means, okay, thank you. You don't owe us anymore. We're not going to pursue you. We're going to send you letters. But the credit score, it's going to have an impact for up to 7 years. It'll lessen, right? So most people are like, well, I don't want to do that. So, 6 months, even to a year is usually pretty good, as long as we set the right expectations with the client, right? Sometimes I get a lot of clients that are in new construction contracts, and we just want to make sure we're on the same page and we're realistic, because we don't want to set a realistic expectation and tell them, they're like, my house is going to be ready next month. And, we have to have that tough conversation sometimes and be like, well, we're going to try everything, but that's not the norm, right? So as long as we plan accordingly, I think that's the best thing to do, and something that we're really good at. And we're maybe credit repair sometimes got a bad name because they just say, oh, we're going to do all this and we're going to wipe your file clean. And then it doesn't work it's not good for anyone, right? Because now the client didn't get their home. They're upset at you. They're upset at you because you referred them to us. Everybody, it's not a win-win situation. So that is, something that we do pride ourselves on.
Yeah, something that I tell my clients, it's like, you need to have a bit of a patience, because you had this issue, right? And let's be realistic. I know that sometimes we all go through certain things, and I know that sometimes we are, we're not responsible, right? We don't take responsibility, and then they come to you and me, and they want results within months, So I tell them it's not fair. It's something that you've been avoiding for years to be resolved within months. So I tell them, you need to be realistic, and you need to have some patience, because it's gonna take, it's gonna be moving pieces that's gonna get you somewhere, But don't think that it's not possible, because it is. But that's good. That's good. Okay. Can you share a real success story where someone went from being denied on a mortgage to become a homeowner due to your assistant?
Yeah. Well,
I'm pretty sure you'd have.
hundreds, thousands, but there's some that do stand out more than others. And I will say that that's the fulfilling part of the job, right? Is when you help someone. So we had this family. They were kind of almost like family friends. We know that my son plays a lot of travel baseball and everything. And when you meet people through that, you kind of become friends, because you spend so much time with them in tournaments and everything. So we had these friends, a bigger family, right? I think it was 7 children, right? The father is a veteran, super hard worker. He's even, slightly disabled. Mother's, super hard worker. And they had been renting forever. And they can't rent just a normal 3-2, right? They're usually renting a bigger home because of the children, right? And sometimes not in the area, where they wanted. The kids move, schools and things like that, and they just never thought that their situation could change because they had credit issues when he came back, and things happened, his disability, and so they had a bunch of collections and a bunch of everything. He knew about like a VA loan, and I told him that's one of the best loans, you can get, but you still have to qualify, to a certain point with your credit. So the thing is, a lot of these people are shy. No one wants to admit they have bad credit, right? Okay, that's why like sometimes our testimonials is like, we have a lot of people, but they don't want to come out and go on YouTube and say, hey, my credit was really bad. And then now, but he finally, as we became closer, said, can I talk to you? And obviously all our things are always confidential and in trust, we understand the situation. He says, I've got this, I've been running for this. I think he was paying, I don't know, 20 something hundred or whatever, My friend told me about this VA, but I don't want to tell anybody that my credit's this and that. I want to talk to a realtor yet. His friend was a realtor. His friend was a lender. He's like, no, I'm just doing other things. So, we talked about it. I told him, let's do it, set up a game plan. It took him about 9 months and bought a brand new home, right? They surprised the kids, they were all excited. They could, I don't think each one of them had their own room yet, but they were maybe bunk beds or something. And some of the older ones, were moving, and they were so, thankful, appreciative. They tell everyone, I think it got to the point to where even their relationship was better as a marriage, right? Because it's financial stress, and those things are one of the biggest causes of, divorce. So I love seeing that, right? From the excitement from, the kids to them finally saying, they have somewhere, when just a year before they thought that they would always be renting, and he was trying to figure out, I'm not really going to make more money as the years go on, but I know rent's going to keep on going. So he had that stress versus, as when you get a mortgage, it's a little different. So I think that's one of the ones that really stands out to me.
That's good. It's always good when you get those stories and give you motivation that, it's you helping lives out here, break barriers. All right. Here's another question. If you had to give one piece of credit advice to someone who wants to buy in the next 12 months, what would it be?
So it's going to be to start the process. Okay. There's two types of people. There's some people that think that, like the gentleman I was talking about, that they had a few hiccups and their credit screwed forever. So they're always putting off. They're never looking into it, right? And then there's people that think that their credit's great and they're going to wait till, a couple months before go in their credit, and they're going to be qualified and their lease is up and they're going to be good. And I've seen both of those to where it can backfire, right? So the main thing, the best advice I can say is, if you, within the next year, go get with someone like, let's say, like Dany, right? Have them take you to the lender and run your credit. Okay. See where you're at. Okay. If you need some work, credit repair, then that's why it's so important, right? So we can make a game plan and get there. Or if you're ready to go, at least you can plan now and get an idea of your price range, right? Any loose ends you may need to tie up, taxes, whatever the case is. But my biggest advice is, if you want to buy within the next 12 months, is pull your credit report. Okay. See what's on there. You'll be surprised. Sometimes there's a lot of errors on credit reports. There's clients that have accounts that aren't theirs. People aren't aware that in order for an account to appear on your credit report, it doesn't even have to match all your data. If it matches a couple things, right? If there's another Dany that lives on the same street, maybe have a similar birthday, you can wind up with that person's accounts on your credit report. And it's not identity theft. It's what we call a merged file, right? So you may need to address some of those things. Hey, we need to send some things to the bureaus and saying, this isn't me. Send some documentation so we can purge that information, because you didn't even do anything wrong. Right? So you think you've got good credit, you go to the lender, and then there's those things. Speaking about, if you don't mind me bringing this up real quick, Dany, how we said, you do lives and there's new things coming up and changes. Have you heard of, and we've seen this impacting, the buy now, pay later counts now showing up on credit reports?
Right. We heard something about it, but
yeah.
So
we've been seeing, obviously, because we see, hundreds of credit reports, a month, is, your things like your Affirm, your Klarna, where a lot of people use them, right? You go, and it used to be like, you go into the app and they say you got $3,000, or, buy it with Klarna, split it up in payments. Traditionally, those wouldn't show up on credit reports. right? Because it's like short-term financing and things like that. A lot of them are showing up now, so that can impact your credit score and you buying a home. Because now, if you get a new account on your credit report, depending on how the rest of it looks, it can lower your score, right? It's a new account, the age or whatever it is. And also now when you're applying for a mortgage, it can impact your debt to income ratio, right? So for those that don't know, I'm not the lender, but we do, we do this all the time. Your debt to income is, your income versus your monthly debts, your monthly bills, right? As a percentage. So if you make 5,000 a month and your bills are 2,500, you have 50%. And the lenders want you to be somewhere 40 something, whatever percent.
Right.
So some people are barely there, right? But now these loans, if they show up and now you got a $100 payment here and $150 payment here, that debt to income went up and now you may not qualify for the home that you wanted, right? So you didn't either reduce that debt or make more money, whatever it would be. So those are coming up. So people used to get them all the time and not worry about it. And now we're seeing them come up, and we're seeing underwriters request those statements. Sometimes even if it's not on the credit report, if they see a payment like that on the bank statements. I just had a client that happened to. It wasn't showing up on the credit report yet because it takes 45 days or something. They're getting ready to close, and they were asking for bank statements and to verify funds and stuff. And they saw payments to, I don't know if it was I think it was a firm or Klarna, and now they requested a statement from that account to see how much was left in the payments. Good thing this client was within the debt to income ratio.
Yeah, that's
within it, but it could have very well been the other way around.
that could have pushed them over. Yeah.
Yeah. So that's why if you're going to be buying within the next year, pull your credit report, go with the lender, get an idea if your credit score is close, if it's not, if you need to clean things up, if you need to save money, if the lender tells you, or you had expectations, you don't know houses cost that much, or a lot of self-employed people where, you run into this a lot, maybe they don't know how they have to show their income. So if you're going to buy within the next year, it's need to start now because it is a process, even if you don't need credit repair.
Yes.
Right. But if you do need credit repair, then that might even be a little prolonged process. So you want to make sure you plan accordingly.
Yeah, that's very true. You won't know where you at until you start, and I know that everything that we spoke about is just, information for our audience to consider, right? And that giving them hope, and because once they sit down with you, you could digest, you could see, okay, we need to fix this, we need to fix that. And so that's important. So I wanted to ask you to see if anybody that maybe not now, but is considering how can they reach out to you for your stories.
Yeah. So there's a lot of ways. Obviously, we have our phone number, 915-201-2604. And then we have our website, texasconsumercredit.com. On social media, we're at Texas Consumer Credit on just about everything. What I will do also, Dany, is I'll provide you, we have a link. I forget the link because it's like one of the shortened links, they make up, but it's to request a free consultation. And that's really the first step, right? It's no obligation. Let's talk about your situation. Let's see what's going on, in private, right? A lot of people don't want to do it on the live or things are going. Also for like you all, Dany, as realtors and lenders, we also have another form. It's like our digital business card.
Mm-hmm.
And I'll send you that. You can send it to your clients if you want. It'll have our contact information. There's also a section on there where you can refer them if they're okay with that. And if you are going to be the realtor, that way we can all stay in the loop.
Gotcha.
Right. So like we'll keep you updated, and like if they do become a client, we keep you in the loop as far as the progress reports and things like that. So I'll send you, if you want, some of those links, and you can post them in the
For sure.
our description or anything.
Down, on the comment section.
Yeah, because that's the best thing, is to set up a request a free consultation.
Okay.
The initial consultation's free, 10, 15 minutes, 20 minutes or so. We're going to go over everything. And then from there, we can see, okay, still got the credit report or see. But that's always the first step, is that first initial free consultation.
Okay. Well, I appreciate your time. I appreciate everything, all the information that you have given us. Guys, if you are considering or need help, or just curious to know where you stand, it's important just to start the process. You could speak to a lender, you could speak to Edward, or you could speak to me, and we will try to help you as much as we can. So that's it. Until next time, Eduardo, thank you a lot again for all the information that you have given us.
Of course. Thank you. Anytime.